back to our channel, Elliott Counts. Today is 25th February, market close 6 p.m. CAVA is the stock that we will be speaking about it today. CAVA, we've been tracking it for a long time, but this will be the very first video. CAVA closed at 86 bucks. It reported the earning yesterday. It came out pretty good. And the story is not that it's at 86. The story is about the future, what we are going to be looking at it. And it is a very interesting stock and good to have this in our portfolio. I do have it for a good time now, but if somebody is looking to add or new stock or increase some position on this will be the perfect time, looks like it. And what if it's not going to be working in your favor, how to minimize the loss, that's what we are going to be talking in this one. So this is our candlestick chart, a daily candlestick chart. We are just looking over here, our Fibonacci, where it's standing around here. So Fibonacci 50% of this coming around 102 bucks, 100 bucks basically. If you see our one of the black line 60. So very interesting part is that from 30 to 171, 170 somewhere it went, and it came down all the way to 43, I believe. I was looking at 37 to add more positions, but it did not come 37, but that is fine. We were adding at each level, so it's a good that you have staggering buys. If you are thinking that stock is good, then you should not be buying at one price everything. It should be having a staggering buys if it goes against your trade. This is same. I corrected my Fibonacci over here, so 50% is coming 108. Look at the gap over here. That is one of the things. Gap is going to be when it was going up, that was the gap. It came down, it fell. Just an observation over here. So it could play a significant role while we are going back. And this one was the gap that we just fill over here. So gap fill was done on this part when it was going down. This line, what you see is kind of the EMA line. That gives me pretty good signals actually on my trading system, that I do have it. We will talk about it in later in the same video. So this is very interesting. This is my point and figure chart. This is very neat. It takes the noise out, it takes the time out, and it just gives me demand and supply at the price, what price and what is it doing at certain level. So if you see that this line around 98 is going to be my very first resistance. Our Fibonacci is somewhere around 108 or 50%, give or take. I mean, it's fine. Don't bog down to exit numbers when it comes to trading. You have to have some flexibility on it. So the next on the upper side, the resistance that we will be looking is going to be 143. If you see that when it was coming down, this is over here. If you see my left hand side cursor, that is coming around 84 bucks, I believe, or 80 bucks. So that was a good support zone at that time when it was coming down. So I added personally a position over there. And again, the next one was added somewhere around 54 bucks. And then I believe we did not add anything around 44 or 44 range because I was looking at 37. I cannot go we cannot go and keep buying at all the price when it goes down, but it has to be at certain point. And if you see the green and red, these are my truncation parts, so points actually, I'm sorry. So when you are looking to sell it, you should be offloading something if you think there is a risk involved, and if it goes down, and if you are still happy with that stock, then you should be buying back. So as an example, in this case, if I'm happy to sell it, I should be selling between 92 to 98, and if it comes to 71 bucks, I should be buying back. And if it goes down, I should not be adding anything till I see now 44 range, right? That's how it is. That's what the dotted points means. I mean, it could be entry or exit points, let's call it. But you should not be offloading your entire portfolio of that stock at one point. Otherwise, you might miss the big run on it. What's going on here? So this is my delta on a weekly basis, I believe. Just a observation what it was doing for last couple of weeks, when it went down to 30, 40 range, and how it climbed back. What we have seen, the volume spike up over here. This is the delivery volume. Before that week, we had some seen some buying opportunity, good buying over as well. So it's not an insider trading, let's call it, but smart people know, digest the data. They know that, okay, what trend is going to be. And if you see, for the last couple of, actually since 2026, we were hovering between 72 to 60, and we just have a breakout right now. This is our monthly delta, and this is our February 1.41 after such a long time that we had seen such a good buying on a monthly basis. So the story is not ending here. 10 actually the target should be around on a long run scenario should be around 140, but before that 100, which is a psychological barrier, which we might see some cool off happening. And if you see it's coming down to 70 bucks or even a little bit lower to 60 range for whatever the reason, it should be used as a buying opportunity and consider it as a long run on CAVA. So CAVA is very interesting. Invest for a long run. Trading Swing trades are good. Intraday, I do not believe, or like 1 2 day, I do not believe on those positions. It's you have to have time to watch it, and I'm not built for that. Anyway, so this is very easy. What we are going to look, yeah, 115. This what you see over here, 110 and 115. That should be minor. Whole zone over there. We might see some selling coming because we went down all the way to 40 levels, so some people might be offloading some of the positions over there. And if you see 130 over here, is going to be good action over there as well. But keep an eye, 140, we will be seeing it. Let me go to the live, actually on TradingView over here. Let me show you something. So this is my point and figure. I'm using 5 minutes. You need to read what is the block size for this one. It's pretty interesting concept. What I want to show you is this Elliott wave. What's happening is, this is my new wave 1, this is my wave 2. So as of right now, we are going to travel somewhere around 95 to 105. 105 is normally what we are going to look at least, and that's pretty coincident that our Fibonacci is standing there as well, and the resistance is coming there as well. If you see in this one, let me go to a little bit smaller time scale over here. So this trading system that I was talking about, it gives you good buy and sell signal. The cloud, this is my bigger cloud that that's good for a long run. This one turns green, the line EMA. Then the cloud over here, that turns green. But this gives the confirmation, and if anything comes in this body, that will be used as a buying opportunity. As an example, this one, when it was coming down, and if it comes in this body, the orange body, it's a sell opportunity again. As long as this is red and this is red, you can check it out. Pretty cool. It's very easy. You can develop it on your own as well. So that's pretty much, that's our CAVA. I do post regular updates on my WhatsApp channel. Videos are difficult, but I've been very consistent for the last couple of days, 10 days, I believe, or more. Let me show you one more thing on CAVA over here. Let me go to bars. So this is what I wanted to show you, Fibonacci's. We went all the way to 43. If you see that it came all the way over here, 43. So this one is going to be somewhere around half of this one, so 12. So 90% was given up over here. It's very rare companies, very few companies bounce back from this level. So this is one of the great company, and their revenue per store is going to be ticking up. Actually, it's going to beat per store Chipotle's numbers. So keep an eye, CAVA. Thank you for watching. If you like it, please comment, subscribe, and stay happy and happy investing. Bye.